Surging prices through the economy. Today, President Biden is asking Congress to issue a federal gas tax holiday. Biden's plan would suspend the federal tax on gasoline and diesel for 3 months. It'll cost roughly $10 billion, and the White House hopes it will save Americans a lot of money at the pump. Here's more of the president.
Every time you go to the gas station to fill your tank, the federal government charges an 18-cent tax per gallon of gas that you purchase and a 24-cent tax per gallon of diesel you purchase. It's a tax that's been around for 90 years. By suspending the 18-cent gas tax, federal gas tax, for the next 90 days, we can bring down the price of gas and give families just a little bit of relief.
A little bit of relief. There's no question. Anybody who drives a gasoline-powered car knows how outrageous the prices are getting. ABC News' Alex Presha and our business reporter Alexis Christoforous joins us now with more. So, Alexis, let me ask you, what do you make of this plan? Is it going to help consumers, do you think?
I mean, it sounds like a good idea, right? I mean, you're going to be saving about 18 cents a gallon if Congress signs off on this. But critics are saying that this is really just a Band-Aid, doesn't really get to the root of the problem, which is that it's not dealing with the supply shock that's caused prices to move higher. It's not doing anything to get oil back on the market. And ironically, Terry, it could actually cause prices to move higher because cheaper gas encourages more demand, in turn driving prices higher. So it sort of becomes this vicious cycle. So if Congress greenlights this gas tax holiday, it would save drivers an estimated $70 million a day. So what does that really mean for you and me? We broke it down here at ABC News Live. If you drive a pickup truck, you might save about $5.52 a week. $2.94 for a full-size car, and a savings of $2.21 a week if it is a compact. So minimal savings, but nobody's going to sneeze at that. Do want to mention Maryland and a number of other states experimented with a month-long gas tax earlier this year. They saw prices dip shortly for just a short amount of time, but then prices actually spiked once it expired to levels that were higher even before the tax holiday was put in place.
Yeah, it seems a little gimmicky, and Alex, it may not even become law because they got to get congressional approval. So is the White House confident that it can get this done?
They're hopeful they can get this done. And look, I mean, I think certainly the president putting this plan out here, they're going to try to get more support on this, potentially by maybe incorporating parts of plans from the House that are already out there. But Terry, the reality is here that this is a plan that has opposition on both sides. And so that's going to be a high hill to climb. And then, I mean, if you're looking for an initial reaction, well, we just got a statement from Speaker Nancy Pelosi, who said in a statement that we'll see where the consensus lies on a path forward for the president's proposal in the House and the Senate, which, look, you know, if you're the Biden administration that's putting forth this huge plan to lower gas prices, which you know is kind of crucial for the summer months and certainly going into this midterm season, if the first statement coming back from the speaker is, well, we'll see, you know, that leaves some wanting, right? Yeah,
it sure does, and we'll see where that goes. Now, Alexis, meanwhile, the chairman of the Fed, Jerome Powell, today said that the central bank, they're ready to raise interest rates again. They walloped them up, or whatever the opposite of wallop is, drove them up last time to tackle inflation. That's really the tool that policymakers can use. So here's Fed Chair Jerome Powell speaking to a Senate panel earlier today.
Financial conditions have already priced in additional rate increases, but we need to go ahead and have them. And I think that the most recent inflation indicators of various kinds suggest to us that we needed to accelerate the pace at which we get up to a level that is neutral.
So accelerate the pace. See, look, he talks pretty clearly for a Fed chair, but still, if you could translate for us a little bit, what's he talking about here? What should we expect about interest rates, given what we're hearing from the Fed chair?
I think he's really telegraphing quite clearly that interest rates are going to be going up for probably the rest of the year. Their next meeting is the end of July. It looks like we could get another 3/4 of a percentage point increase in rates. And today, before that Senate Banking Committee, Powell did not mince words. He basically said, look, if we have to keep raising interest rates this quickly, it definitely could cause a recession. And now a number of economists seem to agree with him. There was a Wall Street Journal poll recently. They polled 53 leading economists, and now now there is a 44% chance that the economy will slip into a recession in the next 12 months.
And just to explain to people that that's considered the price of taming inflation. They have to do that to get inflation down?
It's a double-edged sword, exactly. And the Fed believes that if they believe that pushing the economy into a recession, it may be a mild one, it may be short-lived, is the best course of action to bring prices back from those 40-year highs the quickest way possible.
Yeah. Well, Democratic Senator Elizabeth Warren grilled Powell. She doesn't like the sound of this about the impact of interest rate hikes on employment, on ordinary working Americans. Let's listen to that exchange.
I think the idea is to moderate demand
to invest
so that it can be in better balance with supply. And
so
the current
it's going to make it more,
demand is well in excess of supply in some areas of our economy.
More expensive to invest, which in turn is going to throw workers out of work. And when they're out of work, they have less money to spend. So I get that rate increases stop companies from spending money to build new plants or to buy new trucks or to hire new people.
And Alex, that's the progressive wing of the Democratic Party saying, you know, workers are going to get it. They'll lose jobs. They'll lose wage increases. So how's the White House addressing these concerns from the president's own left wing there that could drive up employment, more people losing jobs as we head into the midterms?
Well, I think specifically on the recession question, I mean, this is something that we've heard from multiple administration officials, Treasury Secretary Janet Yellen saying that she didn't think that a recession was inevitable. We also heard from Fed Chair Jerome Powell today that he doesn't think a recession is a high risk right now. He also said that he believes that the economy is strong. But what was different today is that he did leave the door open to surprises, saying no one's been able to regularly forecast a recession.
Right. There are people who predict one all the time, and at some point they're right, but it is hard. Alexis and Alex, thanks very much.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel, and don't forget to download the ABC News app for breaking news alerts. Thanks for watching.